Is the Fed's favorite inflation metric important next week? And also Sunday, which happens to be Father's Day, also is the first day of summer. So is that going to be an important day for the markets as we reopen next week? I'm Blake. You're watching the week ahead video. We're going to talk about all that and more, so stick around. Hey traders, this is Blake Morrow, and you are listening to the week ahead in markets with Trading Analytics. And I'm glad that you're here. And yeah, next week we're going to have this PCE data from the Fed. It's going to be an important piece of data, but is it going to be that important? Because this week we just heard from the new Fed chair, Kevin Warsh, and he's got Task Force 5, and one of his task force is going to be tackling inflation and how they read inflation. So is this week's PCE data that happens to fall on Wednesday, is it going to matter that much? I still think it is, or it's actually on Thursday, I'm sorry. I actually think it will, but because obviously the market's really sensitive to inflation because the Fed's paying really close attention. So market calendars for Thursday, it's going to be a big day, but also Sunday, it is Father's Day. So to all you fathers out there, happy Father's Day. Keep being those great role models that you are to our youth that are coming up, because one day they are going to rule the world. But happy Father's Day to you, gentlemen. But going into Sunday, it is going to be really important because it's going to be the first day of summer. And now that we've gotten past the SpaceX IPO, we've gotten the memorandum of understanding. Big options expiry happened on Thursday just before the market was closed for a long weekend. And now that it's summer, is it buy the rumor, sell the news time? I think early next week is going to be really important to gauge how the market's going to respond going into summer. And you got to stick around for the top 3 trade setups because one of them has to do with equities. So we're going to get to all that and more in just a few moments. I do want to also say this is going to be a shorter week ahead video. Nick is not joining me once again this week. He is still traveling. He was traveling last Friday. He left. He's going to be gone. Right now, it's Friday, Juneteenth, actually. So June 19th. It is the U.S. holiday as I'm recording this. But like I said, Nick is going to be back next week, so he's not going to provide a piece to this video. I'm going to quickly breeze through some things that I think are really important, and then I'm going to give you the top 3 trade setups that I have of next week, and then I'm also going to review the ones from the previous week. So let's go ahead and get started. And once again, thanks for joining me. And if you like these videos, make sure you give us a thumbs up. Do all the good things. Give a thumbs up, comment down below. Tell us you like it, share it on social media, and most importantly, subscribe to this channel. You want to support what we're doing? Well, subscribing to the YouTube channel is a great start. It's all free to subscribe, free to give a thumbs up, and free to comment down below. All right, guys, let's get into it. So next week, there's a few things that are happening that I think are really important. First, it's going to kick us off with Monday, and we're using the week ahead videos. So charts, I'm going to come back to that crude oil chart here in a second. But the dollar Canadian, we have Canadian CPI. Look at this massive rally in the dollar CAD. I mean, it is absolutely taken off like it's nobody's business. We're approaching 161% extension, which I think is pretty important. But also, if you look, and let me get rid of this stuff so it's easier to draw on that previous channel. I don't think we need that now. This is all old drawing stuff. I could probably delete all that too, but I'm not going to do that right at this moment. High to low, right? This false breakdown over here. If you look at our, whoops, that's not what I want to do. There we go. If you look at where we could extend to, we're above the 50% retracement. That, was a big breakout. We have 161% extension and a 618 retracement. So somewhere in the 142s, I'm assuming the dollar CAD is going to find some pretty significant resistance. But could we reach for there this week, especially if the Canadian inflation on Monday comes in a little weaker than expected? Absolutely. But what I'd be looking for is a potential reversal somewhere up in that neighborhood. All right, continuing on for the rest of the week, we have a lot of data from Australia. We have CPI come Wednesday. And then we also have on Thursday, and I'm saying this in Australian days, on Thursday, we're going to have employment. But take a look at the Aussie, and the Aussie is going to fit the bill of what we've been talking about. We're obviously going to review this from last week's trade of the week, one of the top 3 trades of the week. But I want you to look at Aussie just a little bit differently now. Yes, it is still a head and shoulder pattern. Yes, is there further downside? Of course there is. But notice where the Aussie is holding. Now, if you take a look right through here, you'll notice that we are on basically triangle support. Now, why is that important? Well, it's extremely important in my opinion, because if you look at this, this obvious level, where's that importance come from? Well, if you take this low, well, actually, even before I do that, just have a gander of what is this level right here? It's 70 cents, right? So it's a big, we call that, in FX market terms or in currency terms, that is a big figure number. Now, obviously, you need to pay attention to the Aussie dollar because of risk, and I'm going to get into that here in 1 second. Risk meaning what's happening in the stock market. We're going to cover, the S&P and crude and group and gold and Bitcoin and all that stuff here in a few minutes. But it's important when you look at the Aussie, because one of the reasons why the Aussie is holding up so well is because equities are near all-time highs. They haven't really backed away. Even if you look at the Nikkei or the Kospi, out in Korea, those markets hit all-time highs just actually 24 hours ago. So when risk is holding up really well, it shouldn't be a surprise that the Aussie dollar is holding above 70 cents. But why is this number really important as well? Well, if you take a look at this low right here, this low to high, you'll notice that we have a 618 retracement right there at 70 cents. So that's telling you right now, if we break through 70 cents, we're going to probably complete that head and shoulder pattern, which I know if you're following along with the trades, the top 3 trades of the week, you know that this is a really important chart to me right now. We're going to get into that in a bit. But anyway, Australian data, obviously CPI actually on Wednesday. Then we have employment data on Thursday in Australia. Then on Thursday, we have the US PCE data. Now take a look at the dollar. The dollar is absolutely on fire. Now that's following the Fed and the more, and surprisingly to me, I was really surprised on how hawkish Fed Chair Warsh sounded. It's his first, FOMC meeting. And you can tell just based on the response that you got here after the FOMC meeting, the market was positioned for a more dovish Warsh. I was thinking we were going to get a dovish Warsh. I was like, there's no way he's going to be hawkish. I was wrong. And I traded the dollar to the long side. Soon as I figured out, I'm like, man, he is not going to be dovish today. I turned around and I went long dollars on Wednesday after the FOMC during the press conference. And if you guys don't know how to, or that I did, well, you can just go to the trades room and go see how I traded the dollar. All you have to do is go back to Wednesday. And you can see exactly what I was doing on the 16th. So if you want to follow along here, you can see exactly what I was doing with the dollar. But that's part of being a member in the trading analytics chat room, which I'll talk about here in a second. But man, that was really, really an important thing with the dollar, because now the dollar is ripping. And even, I know we sit back and we go, is he really that hawkish? I think Warsh is going to be one of those Fed chairs that you're going to listen to his words, but you got to watch their actions. And I think that's what his Fed is all going to be about. He's not doing any more. He's doing less communication, which takes us back to like Bernanke era. So it takes you more like Greenspan and back, which I used to trade through, which the Fed is going to give us less information. Their statements they're less communication, and we're going to be guessing on a lot of things, which means there's more volatility coming in the markets, which is going to be a really great thing for us traders. But with all that being said, you can see the dollar is in breakout territory right now. But more importantly, if you look at the long term of the dollar index, we're approaching a 38% retracement. So what I'm going to tell you here is if the dollar, or if you see, the dollar index, we start to break above like 102, that's going to be really bullish on a more longer term basis. You talk to a lot of traders, analysts that are bullish dollars, their targets are near the 107 level. And if you just look at it as a descending channel, that's really I think doable. Now, technically speaking, now, are we going to get there tomorrow? No. But can we make our way up there? Sure. And doesn't have to be for the reasons that you believe or you think, because the US economy is strong. Not necessarily. Remember, the dollar is also a function of liquidity. If the market's running low on liquidity and they need dollars because they need to sell, they sell equities, they want their dollars back, they want their investments back, they want to be in cash. Dollar can actually rally for a couple of different reasons. And it isn't always just because the US economy is strong or the economic data is better or there's US exceptionalism. The dollar can do better that's why we talk about the dollar being the best risk aversion tool out there. But anyway, that's the dollar. PCE data on Thursday is going to be really important. We wrap up the week with like University of Michigan consumer sentiment. We also have and inflation expectations. We also have on Thursday, we have final GDP, which I don't think is going to be much of a mover for the dollar, but you never know. All right, so that's economic data that we're experiencing next week. Now, before I get into what the S&P is doing and everything else, I want to mention this. Guys, did you know Trading Analytics, it is actually, we have a free version. Yes, we actually have a free version of Trading Analytics. That means that you can actually use the Trading Analytics tool, download the mobile app, and get alerts and analysis directly, and use our tools directly on your palm on your mobile device. But what's really cool about that is it doesn't take a credit card. You just put in your name and a valid email. We need a valid email to send all the alerts to. But then once you do that, you're going to get to use the premium product for 10 days. See, back for the last 10 years, we did a $1 trial. It's more for the logistics behind our system. $1 trial, then you're in our billing system, and then if you can cancel month to month, do it, but you can do a 10-day trial. Now you can actually try it for free. You even get the premium version for the first 10 days, minus the chat room, but then you get to use all the tools. And then even after that, why is it so valuable? Because you have this great tool with a lot of different analysis in 10 different languages with AI summaries every single day, can get you up to speed. The AI summaries, by the way, is our analysis. It's summarizing our analysis across the board multiple times a day. And then you get all of this for free. But, and I'm going to give you the buts, the cool thing is you see all these support and resistance levels. Like when you have a mobile phone and you have an app and you're seeing alerts on your phone, the great thing is when levels are breached or there's new analysis, you're notified on your mobile device. So this way, when something is moving. And not only do we, cover currencies, we obviously cover indices, individual stocks, metals, soft commodities, and even some crypto too, and some fixed income. So yeah, there's a lot that we cover in the markets, and it's all available to you. Take advantage of the free product, but also if you want to be chatting with me and you want to be in this chat room and knowing the trades that I take, how other analysts are trading. You can see how we traded through the FOMC this week. There's a lot of great conversations. This is probably the most active community you're going to find that talks about markets 24 hours a day. So if you want to be involved in talking to other people regarding what's happening in the markets at all times, it's $1.18 to be in our premium product to get involved in the chat room. All right, so take a test drive, download your mobile app, and upload the free version of Trading Analytics. And then obviously you can do the pro version and get the scanning tool, which scans over 5,000 or 4,700, almost 4,800 different instruments. Yeah, 4,700 instruments, and looks for trade setups, as you can see here, based on criteria that we have set forth in the market. So yeah, that is our pro product, which also gives you some other pro tools as well. All right, guys, getting back into what's happening this next week or other markets that I want to cover, let's take a look at the S&P. The S&P is obviously very important right now because we are perched above the highs, but you notice where we held. Like we held the important support that we talked about last week, which is right here. We're still above it. The markets rallied really sharply in the middle of the week when that memorandum of understanding was digitally signed between Iran and the U.S. administration. Then we had on Thursday, we had and then also we had the FOMC meeting. But on Thursday, we had options expiration, big expirations, a lot of hedges coming off in the markets. That's kept us elevated. But what happens next week when we have to put all these hedges back on for protection? So I'm going to tell you how I want to trade the S&P, but I'm going to do that at the end of this video on the top 3 trade setups of next week. And I'm going to review the ones from last week, so stick around. All right, so that's the S&P, but take a look at where the NASDAQ's at. So the NASDAQ, big breakout, right? Challenging these highs, but look at the Dow and look at the Russell. So the Dow is at wedge resistance, which we've talked about, so we can actually move that up right like that. Look at the Russell, also at channel resistance, right? So we are, challenging levels that are really, really important in the market. So therefore, keep an eye on everything, because I think now that, the market doesn't have much else to look forward to for summer, and it's the first day of summer on Sunday, the first part of next week is going to be a little rocky and potentially a down week this next week. And that's the way I'm going to be trading it anyway. All right, so moving right along, I wanted to point out gold, because gold is extremely weak. We continue to fail, and we talked about it this last week. We continue to fail while we're below the 200 DMA. I said, as soon as we break through the 200 DMA, you got to look to the downside. Well, guess what? Even rallies are getting sold. We're getting sold at previous support, acting as current resistance. And if you haven't known that all week, well, good news is, moving forward, if you're using trading analytics, even the free version, you're going to get basic technical analysis every single day, and you can actually go read through the analysis all week long, and how much we talked about resistance at 43.70 and how important that analysis is all week long. That resistance remains at 43.95, 4,400. Key resistance, 43.75. Main resistance, 4,400. We just kept talking about the resistance and, how we're going to continue to fail there. Well, we've failed. And now the risk is for gold that we finally complete. This is the gold pattern that we're looking for. That is what we call an alt bat, which this is a bat. This is a bat, and then this is an alt bat, right? So that is what looks to be completing this is a butterfly. It's a butterfly. Bat is going to be in something else, which I'll have to get into as soon as it comes to my head. But anyway, that's one of the harmonic patterns we're looking for. But regardless, it's pointing towards 3,900, which seems like a logical place, as we talked the last couple of weeks, for gold to get to. Flushes out all the stops below 4,000. And for those of you that want to take on some risk, because like myself, I'll probably be going long here over the course of the next week or two, if gold sees below 4,000 this next week or two. All right, so continuing on, if you look at silver, silver looks like we can actually make our way down towards channel. Whoops, I didn't mean to do that. We can make our way down towards channel support. You can see channel support right here, which will be at that big breakout point around the $55 level. And that's what we've been targeting the last couple of weeks. But notice how silver is failing as well. Bitcoin is a big deal to me. We talked about last week this the rolling a ball off the table. You guys remember that conversation and how we can reach for 52,000. Nothing's changed here, but actually a few things have. I say nothing's changed as far as the price action goes, but if you look at it closely, this is a bear flag pattern that is developing. So as I said on social media, like on Wednesday, if you follow me on Pipzar on Twitter, on X, I said it's a bear flag in a bear flag in a bear flag, which means that it's bearish in a bear flag that's still we're waiting for completion at 52,000, and a longer term bear flag that points to 20,000. We have a shorter time frame bear flag that actually is going to point us to the 161% extension if we complete the whole thing. So we're a bear flag and a bear flag and a bear flag in Bitcoin, which is not bullish, right? Now, I still think that we could get a significant bounce from the 50,000 mark because it's 50K. There's going to be a lot of people trying to buy there. 52,000 has been our downside target, right? For this one right here, this red bearish flag. It's been our target for months. I still think we can get there. And I think that's going to be a tradable bounce area. As I've told you guys the last couple of weeks, on the trade setups, which we're going to get to here in a second. But that's Bitcoin. And then the other thing we should probably just be looking at is we should probably be looking at yields, because it's not actually the belly of the curve here around on the 10-year yield, although I still think that they look fairly perky. But take a look at the U.S. 2-year. So let's get into the 2-year. Look at how perky these yields are looking. Now the front end of the curve is starting to rip, and so we need to, as market participants, we need to pay attention to that, because it's obviously the way the 2 10s are moving makes the market a little bit more dangerous. Stock market is a little bit more dangerous at current levels. All right, and continuing on with other things that I wanted to cover before we get into the top 3 trade setups of the week. I wanted to talk about something that is really very important. I know I've discussed this. We've discussed this a lot in recent weeks here. But look at this massive breakout of this descending wedge on the Euro Swiss. Remember, we did talk about this a week or 2 ago, looking for the breakout above the 200 DMA and the wedge resistance, right? As soon as we break that wedge resistance, grab the wrong thing. As soon as we break that wedge resistance, right? Well, we broke that wedge resistance, and now we're above the 200 DMA. This is a huge breakout, guys, and I've been saying in our chat rooms on a daily basis for the last 2 weeks, you got to look at the behavior of the Swiss franc. I've been in currency since currency markets were allowed to be traded in the United States, which was back in 2001. I started trading them basically at the end of 2001, and I was the chief currency strategist for the Wise Trade Group and MB Trading all the way through 2011, and then before we became Ally Financial. And as a currency trader, what I've noticed over the last 24 years is basically the Swiss franc always strengthens when there's risk aversion. That behavior has changed a lot over the last month, and I've been recognizing it, and I think most people in our community have as well. What's really interesting is if stocks start to go down, if the Swiss franc goes down when stocks are going down, that's going to be a behavior that's changed, that's been different over the last 20 years. Now, there's been some bank analysis based on what the Fed is said and how people are viewing that the dollar, the safe haven status of the Swiss franc may be in jeopardy. But more importantly, it's a carry trade too. So even if equities stay strong, being long the Euro Swiss or Aussie Swiss or dollar Swiss or any other Swiss franc, anything but Swiss francs, as the Swiss National Bank interest rates are at 0, it provides a really healthy carry for anybody who's long, just say the Euro Swiss, which I happen to be for the last several weeks. So keep your eye on the Euro Swiss. This could really take off. And now that we're coming out of this very bearish long-term trend, this is a bullish reversal sign that could give the Euro Swiss a much bigger recovery it's not going to happen tomorrow, but in the weeks, months, and maybe even years ahead. All right, guys, that's what I wanted to cover just briefly here on the week ahead video before I get into the top 3 trade setups of the week. But as we talk about the top 3 trade setups, what's probably the most important thing to you as volatility looks to set to increase this summer is how you are trading the market. So I want to just share with you that our trader funding program for instant funding, that means you'll have capital to trade as soon as you fill out the paperwork, instant funding and one-step assessments up to $1 million in funding are at 30% off both types of assessments, instant funding or one-step assessment, 30% off. You use the code SUMMER30 on your checkout. Now, if you don't know what funding programs are or you're not familiar with them, I want you to sit back and watch this 2-minute video. But I want to tell you before you do this, and you can learn, figure out which one's best for you. When there's volatility and you want to participate in volatility and you want to make money, you want to have more capital to trade to be able to press a little bit more aggressively if you want to take advantage of a certain situation. The trader funding program, instant funding, and both one-step assessments are something that we've been doing now for the last 3.5 years, maybe going on 4 years with our traders. And it's been a wonderful program for certain people. Certain people really, really enjoy this because maybe they don't have the capital to trade or they don't want to risk their own money. So again, sit back, take the next 2 minutes, watch the different funding programs, and then remember, use this discount code. You have until July 6th. That's the day after the 4th of July weekend in the United States. So you have the next couple weeks to take advantage of this. All right, I'll be right back. Are you ready for the incoming volatility of the markets? Are you fully funded as a trader? Well, take advantage of the Trader Funding Program Summer Sale going on until July 6th, 2026. You can save 30% on instant funding accounts or one-step assessments. Now, with your instant funding account, you could qualify up to $100,000 in capital. You have to maintain above 8% of a high watermark. So as you make money, you can't lose more than 8%, but you get to keep up to 90% of your gains. With a one-step assessment, you could qualify to manage up to $1 million in capital. However, you can't risk more than 6% of your high watermark. So as you're making money, you can't lose more than 6%. And you have unlimited time to pass your assessment. And once you do that and you're trading live capital, you can keep up to 90% of what you make. But more importantly, you're going to be involved in the new trading analytics community. ForexAnalytix has evolved to trading analytics. We cover all sorts of markets. We give you more tools, and we give you a community to help you become successful as a trader, to have framework as a trader. So take advantage of the Trader Funding Program. And one last thing, we added a new team member. His name is Josh Powell. He'll be with each and every one of you that come into the Trader Funding Program. He's going to be with you, and he's also going to answer any questions you may have. He's passed accounts and assessments from many different firms for the last several years. So you'll be in touch with one of our team members, Josh Powell. So make sure you take advantage of the summer sale up to July 6th, 2026. That's a Monday after the 4th of July holiday. Save 30% with the Trader Funding Program, and we'll see you in our community. Once again, the promo code is SUMMER30. Make sure you use that on the Trader Funding Program. Over the next couple of weeks, you have until July 6th at midnight Eastern. So take advantage of that. All right, guys, let's go into the top 3 trade setups of last week, and we want to discuss those. And then I'll give you the top 3 trade setups in my view for this next week. All right, so last week, the first one, trade setup number 1, we said, hey, if the Aussie dollar trades at 70.80, it's going to be a good short because it's the head and shoulder neckline. Well, this week's high was 70.88. So instead of hitting 70.80, we hit 70.88, and then we dropped back down to 70 cents. So I was off by about 8 pips. So would you say that first trade setup worked well? I don't know if I could have done much better, but obviously I could have said 70.88. That would have been better. But you guys get what I'm saying. Trade setup number 1, it worked famously. So I hope you guys enjoyed that one. I'm short the Aussie dollar right now too. I've been trading it from the short side since the FOMC and prior to the FOMC. So hopefully you guys have done well with that. All right, trade setup, and again, if you want to know how I traded it, just go to the chat room. Trade setup number 2, short S&P below 72.25 on a breakdown. Well, unfortunately, that hasn't happened. Not yet. Okay, I was looking for a breakdown below here to get on the short side of the S&P. But we rallied back, so that has not happened. So trade setup number 2, we call it a scratch because we set up for trades. Some trades don't work out. Some trades work out famously, like the Aussie. Some of them, we get ready for them, and they just never come to fruition. Well, this is one of those. So we call it a scratch. So one worked well, one's a scratch. The third one was short gold while below 4,400, target 4,100, then 3,900. Oh no, that was 2 weeks ago. I'm sorry, but hey, that worked great too. I'm sorry. Last week was long dollar Swiss above 80.45. Sorry, that was 2 weeks ago. 80.45 for a breakout. Well, we broke 80.45 and we are breaking out. And currently you're up and it's still going, the dollar Swiss. So did trade setup number 3 work? It did. So we had 2 trades that worked great. One of them is just a scratch. So that was a good week of trade setups. That was last week. So what are the top 3 trade setups of this week? Because, you know, now we're in a situation where what do we do? Especially now that summer's coming. Well, first trade setup for this week is going to be short the S&P at 75.50, basically where we're at right now or higher. So I'm looking for the S&P at this 7,500 to 7,550 level. So right through here, let me just draw it out for you as a short, okay? Because, dang it, I didn't want to do that. Let me move that back. Because I'm looking for a sell-off here. This would also be a bat, which would take us back down to those lows. So the first trade setup is shorting the S&P from 7,500, where we're currently at right now, all the way up to 7,550 for a potential short. And I'm looking for an eventual break below this week's low to add. So in other words, short there, breaks through here. I'm going to add to it somewhere down here and eventually look for a move down to here. Okay, you guys got trade setup number 1. That was trade setup number 1. Trade setup number 2. I want to pick up dollar Swiss again. If you missed it last week, because some of you are like, damn, man, I saw that. All right, fine. If it dips back to 80.50 down here, I'm looking for a long back down to here. Now, I'm already long, but for those of you that missed it, I think that's a great trade setup going into next week. So buy dips to 80.50. That was trade setup number 2. Trade setup number 3, crude oil. So as long as crude oil remains above the 200 DMA, I'm looking for long. So you guys remember from a couple weeks back, I was looking for a dip below 80 to get long. Well, you know, we got to the 200 DMA. We got a hammer on Thursday. That's Thursday. Today, we're trying to follow through. So while we're above that 200 DMA, I'm looking for a move back above 80 and beyond. So while we're above the 200 DMA, I am looking to be on the long side of crude. And those are your top 3 trade setups of the week. Once again, guys and gals, if you like these videos, make sure you give me a thumbs up, subscribe to the channel, comment down below if there's anything that you think is really important that maybe I've missed, because yeah, this is a quick video because we have a holiday weekend. But also take advantage of trading analytics. You have literally, you want to support what we do here. If you like these like free videos that we've done for the last 10 years, well, come jump in the chat room with me. It's $1.18 a day. And if you really want to support us, do the pro. So this way you have a scanning tool and you scan through all these different markets, and that's less than $2 a day. I mean, even the premium's like €1 a day, but at least get a free trading analytics account, use the premium for the next 10 days. But more importantly, now you have alerts on your phone. So all the markets we cover, 60 different markets, when those alerts start going off, like, oh my gosh, Google's breaking out, or oh boy, the dollar index is breaking down, or oh boy, the S&P is hitting new highs and new highs and new highs, and you keep getting these alerts. Now you have a tool in your pocket or in your palm that tells you when the markets are moving aggressively, and it's free. So take advantage of that. All right, guys and gals, my name is Blake. I want to thank you so much for spending your time with me. I know you're probably spending your time over your holiday weekend or your long weekend, watching this video. So I do appreciate that. And for all you fathers out there, happy Father's Day on Sunday, and happy summer to everybody. All right, guys, my name is Blake Morrow with Trading Analytics. I'll catch you guys on the Monday morning face show. But don't forget, the flow show with Ryan and K-Man is just a couple hours before. So get prepared for your trading day in Europe with our team, our European team. All right, guys, have a great weekend. I'll see you next week. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.